So today, we're going to unpack a pretty stunning corporate turnaround. We're digging into Seatrium's latest annual results, and believe me, the numbers tell a really remarkable story of recovery and growth. If you're an investor who follows the energy sector, you are definitely going to want to see how they pulled this off. So let's get right into it.
Right off the bat, here's the one number that kind of tells the whole story: 106%. Yep, that's the jump in net profit. The company literally more than doubled its bottom line in just a single year, leaping from 157 million to 324 million Singapore dollars. I mean, that is a crystal clear signal that a fundamental shift has happened at Seatrium.
And you know, the CEO's message really drives that confidence home. When Chris Ong says they've delivered a strong set of numbers, he's basically telling the market that their transformation strategy wasn't just some plan on paper. No, it's delivering actual, tangible financial results. He's telling investors that the foundation is now solid and they're ready to accelerate their growth from here.
All right, so here's our game plan. First, we'll hit the headline numbers that prove this turnaround is the real deal. Then, we'll dig into the how. What was really driving this performance? From there, we'll look ahead to the company's future pipeline. And we'll wrap it all up with the key takeaways that every investor should know. First up, let's dive straight into those core financials. These are the numbers that officially mark Seatrium's big shift from just recovering to real profitable growth.
Now, this table right here tells such a fascinating story. That 24% revenue growth, that's solid, for sure, but it's not even the main event. Look at the gross profit, a staggering 192% increase. What that tells you is that they aren't just booking more projects, they're actually executing them far more profitably. That operational leverage is exactly what fueled the 106% net profit growth. I mean, that's the definition of high-quality earnings, right?
Okay, so the numbers are obviously impressive. But the real question is, how did they pull it off? Let's look behind the curtain to understand the engines that really powered this growth.
This breakdown is absolutely crucial to understanding their strategy. You see, oil and gas at 71% is the cash cow. It's funding everything right now. But look at offshore wind at 18% and growing fast. That is clearly the future. So this isn't just diversification for the sake of it. It's actually a really smart hedge that lets them profit from today's energy needs while building a dominant position in tomorrow's.
And here's a perfect example of the why. Projects just like these massive floating production, storage, and offloading units, you'll hear them called FPSOs, they are the backbone of that 71% oil and gas revenue. Building and delivering these super complex, high-value assets efficiently for clients like Petrobras was a huge driver of their success this year.
And right here, this is the future growth engine. A massive 60% year-on-year expansion in offshore wind. That's huge. And it's driven by these high-tech projects, like this high-voltage direct current, or HVDC, platform. The easiest way to think of it is like a giant power substation out in the middle of the ocean, which is crucial for getting wind energy back to shore efficiently. This really proves that Seatrium's heavy engineering skills are a perfect fit for the renewables boom.
Now, beyond just revenue, the company's overall financial health has improved dramatically. On the left, you can see the gross margin more than doubled to 7.4%. Basically, they're operating way more efficiently. And on the right, the net leverage ratio dropped down to 0.8x. This is a key measure of debt compared to earnings, and a lower number means a stronger, less risky balance sheet. So what's the big takeaway here? They're not just more profitable, they're also way more financially stable.
Okay, so that all paints a really great picture of the past year. But, you know, as an investor, the real question is always, can they keep this going? Let's take a look at the future.
This number is all about one thing: visibility. $17.8 billion. That's the value of their secured order book. It means they have a predictable stream of revenue already locked in for years, with some of these projects stretching all the way out to 2033. And for an investor, having that kind of long-term certainty, well, that's incredibly valuable.
And here's the secret sauce for making that order book even more profitable. About 95% of it is what they call series build projects. Think of it like an assembly line for these gigantic structures. By building multiple, similar units one after another, they gain tremendous efficiencies, they cut down risks, and they improve their margins. It's a key differentiator that lets them bid competitively while still making healthy profits.
So, okay, if the order book is all about stability, this is all about the next wave of growth. $32 billion. That's the value of new projects Seatrium is actively going after over the next 2 years. I mean, capturing even a fraction of that pipeline would significantly boost their future earnings potential. And when you look at this pipeline, you can really see their two-pronged strategy in action. The majority, $23 billion, is right in their oil and gas sweet spot, but they're also targeting another $7 billion in offshore wind. So just to be clear, this isn't them pivoting away from their core business. No, it's a strategic expansion designed to give them resilience and capture growth across the entire energy spectrum.
So what are they going to do with all that profit? Well, their plan for allocating capital is pretty much exactly what you want to see as an investor. It's a really disciplined mix. They're reinvesting in growth, managing their debt, returning cash to shareholders through dividends, and keeping an eye out for smart acquisitions. It's a clear roadmap for creating long-term shareholder value.
All right, we've crunched the numbers, we've looked at the strategy. Now let's pull it all together into the most important takeaways for you as an investor.
So let's wrap this all up. Here's the full story. The turnaround is real, and it's built on a rock-solid foundation. They boosted profits by getting more efficient, not just by winning more work. Their future revenue stream is secured by a massive order book, and they've got a huge pipeline of opportunities to keep that momentum going. And maybe most importantly, management has a clear plan to return value to shareholders. This is a story that's backed by some very strong fundamentals.
And you know, there's really no clearer way for a company to show confidence and reward investors than this. The board is proposing to double the final dividend to 3 cents per share. It's a tangible return, literally putting cash back in your pocket if you're a shareholder. And it's a powerful statement from management that they believe this strong performance is absolutely here to stay. And so all of this really leaves us with one big question. Seatrium has proven it can execute in both traditional energy and in renewables. It's fixed its balance sheet and has a clear strategy for growth. So the ultimate test now will be whether it can leverage this incredible turnaround to become a true leader in the global energy transition.
This content is intended to serve strictly and only as an informational, independent, objective summary of recent events and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.